When most people think about market crashes, they imagine complex economic forces, banking failures, or global pandemics. They picture months of build-up, warning signs, and gradual collapse. But in the age of social media, entire economies can be wiped out with 27 words and the press of a button. On October 10, 2025, Donald Trump posted a single message that obliterated $200 billion in cryptocurrency wealth in a matter of hours. And the scariest part, it wasn't even about crypto. This wasn't some calculated attack on digital currencies. It wasn't a regulatory announcement or a banking crisis. It was a trade war threat that spiraled into what analysts are calling the largest single-day liquidation event in cryptocurrency history. 1.6 million traders watched their positions evaporate. $7 billion in leveraged bets were crushed in 12 hours. And Bitcoin, the king of crypto that had been touching all-time highs just days before, plummeted 20% in a bloodbath that left even seasoned traders speechless. But here's what makes this story truly terrifying. The crash wasn't caused by anything fundamentally wrong with cryptocurrency itself. It was triggered by geopolitical fear, amplified by leverage, and executed by algorithms that don't care about human suffering. And if you think this was a one-off event, you're dangerously naive, because Trump's relationship with crypto markets has been a roller coaster of destruction and euphoria that reveals just how fragile our entire financial system has become. Let me set the stage for what happened that October morning. Bitcoin had started the month on an absolute tear, fresh all-time highs above $126,000. The market was in what analysts call the euphoria phase. Retail investors were pouring money in, convinced they were witnessing the next great bull run. Leverage was through the roof as traders borrowed heavily to amplify their bets. The total crypto market cap had swelled to over $4 trillion. Everything looked unstoppable. Then at exactly 9:47 a.m. Eastern Time, Trump fired off a post to Truth Social that would change everything. He announced plans to impose 100% tariffs on any and all critical software from China. The reason? Beijing had just imposed broad export controls on virtually every product they make, including rare earth minerals that power everything from smartphones to electric vehicles. Trump's response was swift and brutal. He cancelled a planned meeting with Chinese President Xi Jinping, saying there was no reason to meet anymore. Now here's where it gets interesting. The post had absolutely nothing to do with Bitcoin, Ethereum, or any cryptocurrency. It was about trade policy and geopolitical tensions. But within minutes, the crypto markets began to hemorrhage. Not because Trump mentioned digital assets, but because his words triggered a massive flight to safety that exposed just how interconnected and fragile the global financial system has become. The mechanics of what happened next reveal the dark underbelly of modern crypto trading. When Trump's tariff threat hit the wires, nervous investors didn't just sell crypto, they dumped everything risky. The tech-heavy Nasdaq fell 3.5%, but crypto, being the riskiest asset class of all, got obliterated. Bitcoin fell from roughly $122,500 to a low of $104,600. That's nearly 20% in a single day. But the real carnage was happening behind the scenes in the derivatives markets. Millions of traders had been using leverage to amplify their crypto bets. When prices started falling, these leveraged positions got automatically liquidated by exchanges to prevent losses from spiraling out of control. Each liquidation forced more selling, which triggered more liquidations, creating a cascading death spiral that fed on itself. The numbers are staggering. $7 billion in liquidations in 12 hours, $19 billion in total liquidated positions. 1.6 million traders had their positions wiped out. This wasn't just a market correction, it was financial annihilation on a scale never seen before in crypto markets. And it all started with a single social media post about Chinese trade policy. Ethereum got crushed even harder, falling roughly 21%. But the real bloodbath was in the altcoin space. Dogecoin, the meme coin beloved by retail investors, dropped more than 50%. Even Trump's own digital currency, the Trump coin, fell 63% at its lowest point. The selling was so intense that it broke parts of the crypto infrastructure itself. A stablecoin trading on Binance, designed to maintain a one-to-one peg with the US dollar, briefly became unhinged. Binance had to issue a statement admitting that some platform modules had experienced technical glitches due to the sharp market fluctuations. What made this crash particularly brutal was its global scope. This wasn't just an American phenomenon. Crypto markets operate 24/7 across every time zone, and the selling pressure was relentless. Asian markets opened to chaos. European traders woke up to devastation. By the time American markets closed, the entire crypto ecosystem had been fundamentally altered. The psychological impact was immediate and severe. Prominent trader Bob Lucas compared it to the March 2020 COVID crash, calling it COVID-level nukes. Another well-followed trader posted about incredible pain, saying this flush ranked in the top 3 all-time crashes he had witnessed. The fear was palpable across social media as millions of retail investors watched their savings evaporate in real time. But here's the part that should keep you awake at night. This crash revealed just how vulnerable the entire cryptocurrency market is to the whims of a single individual, not through any direct action against crypto, but through completely unrelated geopolitical statements that triggered algorithmic selling cascades. Trump didn't need to mention Bitcoin to destroy it. He just needed to create fear about global trade, and the interconnected web of leveraged positions did the rest. The recovery began over the weekend when Trump appeared to walk back his tariff threats, claiming it would all be fine and that America wanted to help China, not hurt it. Bitcoin bounced from 103,000 back to around 112,000 by Tuesday, but the damage was done. Hundreds of billions in wealth had been vaporized, millions of traders had been wiped out, and the entire market had been reminded that no amount of institutional adoption or regulatory clarity could protect crypto from the chaos of modern geopolitics. This October crash wasn't an accident orally. It was the inevitable result of an anima financial system built on leverage, algorithms, and social media sentiment. And Trump's influence on these markets goes far deeper than most people realize. This wasn't his first rodeo with crypto destruction. In fact, his relationship with digital currencies reads like a masterclass in market manipulation, whether intentional or not. Academic researchers analyzed over 13,000 of his tweets between 2017 and 2020 and found something chilling. Negative sentiment from Trump was a predictive factor for Bitcoin returns, trading volumes, and volatility jumps. His words moved markets before anyone even understood what was happening. Go back to 2019, when Trump was still building his reputation as crypto's biggest enemy. He fired off one of the most infamous anti-Bitcoin tweets in history, declaring he was not a fan of Bitcoin and other cryptocurrencies, calling them volatile and based on thin air. The market reaction was swift and brutal. Bitcoin shed billions in value within hours. But here's the twisted part. Even his attacks were making him money for those smart enough to bet against the market before he opened his mouth. The pattern was becoming clear to anyone paying attention. Trump tweet equals market chaos. It didn't matter if he was praising the dollar, attacking China, or talking about trade deals. The crypto markets hung on every word, parsing his syntax for hints about future policy. Traders developed entire strategies around his posting schedule. When would he tweet? What would he say? How could they position themselves to profit from the inevitable volatility? But then something remarkable happened. The man who once called Bitcoin worthless became its unlikely champion. During his 2024 presidential campaign, Trump executed one of the most dramatic political pivots in modern history. He rebranded himself as the first ever crypto president. He promised to establish a Bitcoin treasury, bring all cryptocurrency mining operations to American soil, and protect the digital asset industry from regulatory overreach. The transformation was so complete, it left even his supporters scratching their heads. The power of this conversion became crystal clear in March 2025. Trump posted 2 simple messages about digital currencies becoming part of America's strategic reserve. The reaction was immediate and overwhelming. The global crypto market exploded upward by $300 billion in a matter of hours. It was the inverse of the October crash, proof that his words could create wealth just as easily as they could destroy it. Weeks of global selling pressure evaporated overnight because one man changed his tune about digital money. This is where the story gets truly dangerous. Because what we're witnessing isn't just market volatility. It's the emergence of a new form of economic warfare where a single individual can wield more power than entire central banks. Think about that for a moment. The Federal Reserve spends months crafting carefully worded statements about interest rates. They hold elaborate press conferences and publish detailed economic analyses. All of that institutional weight and procedural gravity can be overwhelmed by 27 words from a former president with a smartphone. The October crash exposed the terrifying reality of our hyper-connected financial system. Crypto markets don't exist in isolation. They're wired into every other market through a complex web of derivatives, arbitrage trading, and algorithmic strategies. When crypto crashes, it doesn't just hurt crypto investors. It ripples through stock markets, currency markets, and commodities. Traditional companies with crypto exposure get hammered. MicroStrategy, Coinbase, and Robinhood all fell between 3 and 12% on that October day, dragging down entire sectors of the economy. But the real victims weren't the big institutions with risk management teams and diversified portfolios. They were ordinary people who believed the hype about crypto being a path to financial freedom. Retail investors who had put their life savings into Bitcoin at $125,000 watched helplessly as their nest eggs evaporated. College students who had leveraged their way into Ethereum positions got liquidated out of their futures. Retirees who thought they were being smart by diversifying into digital assets saw decades of careful planning destroyed in a single afternoon. The leverage component makes everything exponentially worse. In traditional markets, buying stocks with borrowed money requires strict margin requirements and regulatory oversight. In crypto, you can leverage yourself 50 to 1 or even 100 to 1 with minimal verification. When prices move against these positions, the liquidations aren't gentle. They're instantaneous and total. Your entire account gets wiped out before you even know what happened. This is what created the death spiral effect on October 10th. As Bitcoin began falling, highly leveraged long positions started getting liquidated. Each liquidation forced more selling, which pushed prices lower, which triggered more liquidations. The algorithms running these systems don't care about human emotions or financial hardship. They're programmed for one thing: protect the exchange from losses by closing risky positions immediately. The result was a feedback loop of destruction that fed on itself until there was nothing left to liquidate. The global nature of crypto markets made the carnage even worse. Unlike stock markets that close at night, crypto never sleeps. When the selling started in American morning hours, it continued through Asian afternoon trading and European evening sessions. There was no circuit breaker, no cooling off period, no chance for cooler heads to prevail, just relentless, algorithmic selling pressure that ground everything to dust. And here's the part that should terrify anyone holding crypto today. This will happen again. The October crash wasn't an anomaly or a glitch in the system. It was a feature, not a bug. As long as markets remain this interconnected, this leveraged, and this dependent on social media sentiment, we're one tweet away from the next financial apocalypse. The question isn't whether Trump will move markets again. The question is whether you'll be prepared when he does. The October 10th crash was just a preview of what's coming. We're living in an era where a single social media post can obliterate more wealth than entire wars, where algorithms trade faster than human thoughts, where leverage amplifies every emotion into financial devastation, and where the most powerful person in the world can reshape markets without even trying. Trump's crypto influence isn't going anywhere. If anything, it's getting stronger. His words now carry the weight of potential presidential policy, regulatory changes, and geopolitical strategy. Every tweet is a loaded weapon pointed at millions of investors who still believe they can outsmart the system. But here's what the October crash really taught us. The game is rigged, and most players don't even know the rules. While retail investors get liquidated into oblivion, institutional players with better risk management and deeper pockets scoop up assets at fire sale prices. The wealth doesn't disappear, it just changes hands, flowing from the many who trusted to the few who prepared. So ask yourself this: when the next Trump tweet lands, when the next geopolitical crisis hits, when the next cascade of liquidations begins, will you be holding worthless positions, or will you be positioned to survive? Because history doesn't repeat, but if you ignore its warnings, it will crush you all the same. If this opened your eyes to how fragile everything really is, hit subscribe. The next crash is coming, and you need to see it before it sees you.